The Dow tanked almost about 1,100 points overnight, losing 1,500 points on an intraday basis, perhaps the biggest fall ever that the Dow has witnessed, at least on an intraday basis. We're joined once again by Seth Freeman then, and Seth, you can't get over this story. But like some of the analysts were, of course, attributing this to, interestingly, the lack of liquidity. Despite strong fundamentals, like you were alluding to earlier, liquidity is something that has been a bit of an issue. Would you attribute this sell-off to the lack of liquidity, or perhaps the expected tightening in liquidity as the Fed will increase rates?
Well, are you talking about money liquidity or stock liquidity?
That liquidity in equity markets.
Yeah, well, it's true that quite a lot of shares have been sucked up by passive investing funds, by ETFs, and they don't trade as much. And also, generally, retail investors are kind of slow to respond. But I think maybe investors were kind of looking for a reason to have a little sell-off. I'm watching tomorrow's futures look, frankly, kind of worse and worse. So when earlier this afternoon, futures were actually up about 33 basis points, and I think we're looking at maybe downward as much as 2%. So I don't know that it's liquidity. I think there could be some technical trading going on. And then that kind of sets off a lot of alarms in preset trades.
Okay. Seth, how long do you think, two questions. Firstly, do you think we are in a bubble at this juncture, with the Dow at record highs? We did see January be the best month for the markets. So do you think that we are in a bubble, and this sort of is just us moving away from that bubble? Or do you think that this is just a one-off in a long-term bull run?
Well, I've been fairly optimistic about the overall bull market, you could say, continuing for some time. The markets may have gotten ahead of themselves a little bit, although at the same time, earnings so far have looked good, and there's been an expectation that earnings would continue to look good for the reports coming out during this quarter. So, I think it really just reflects some expectations about earlier higher inflation. I think it could be an overreaction to a sense of wage growth. It's nice that several 100,000 or maybe 1 million workers have received $1,000 bonuses from some large corporations and so forth. But one of the problems is also we're looking at hitting the debt ceiling here in the United States much sooner because of the front-loaded nature of the tax reductions.
Right. Seth, I'm sorry, but I know you're being extremely upbeat about, despite the kind of sell-off that we're seeing. But
I'm not upbeat, but I'm not totally nervous either.
Right. Right. But, there's a prospect that, a lot of analysts and economists are saying that the U.S. economic data will continue to strengthen, which further, increases the concerns around a rate hike, which further actually increase the potential for a rate hike. Do you think there's still worse to come from what we're already witnessing?
Well, looking at futures, looking at what's happening in Asia right now as we speak, 4%, 4.8% in Japan. So those are pretty big numbers. And I would expect that tomorrow to not look very good either, although, it does reach a point of capitulation, and certain investors will come back into the market. Whether we're going to pick up everything that's been lost in the last 2 days and probably tomorrow morning, we'll have to see.
How big a threat really is it for for other emerging economies and from other global from other nations' point of view? Because many developing economies have borrowed heavily in the dollars and could they be stung because of these higher interest rates?
Yes, and this kind of situation is bad for foreign emerging markets in companies that have more recently obtained U.S. dollar bonds. That can be very problematic. We saw that, back in the 80s and then the 90s when there was a lot of foreign currency or USD denominated debt held by emerging economies. I don't think this is going to affect India particularly, but this could affect Latin American countries. And, I think Argentina just recently floated some USD bonds. And so this could be very problematic.
Okay. Sir, I also wanted to ask you about the whole government shutdown issue. We may be staring at a second government shutdown because of, the entire debt problems that the government Trump has brought about. The first one, of course, did not see any real panic selling as such by the markets. We took it in our stride. But do you think that, with the second one looming large, the markets may finally press the panic button? Or do you think this is something that, the markets believe the politicians will handle it off in a seamless manner?
Well, the politicians are saying they don't expect another shutdown. And the Democrats are saying they don't expect DACA to be a sticking point on the 8th either. I would say, however, if there was to be another shutdown, I think that would make investors extremely nervous. If our politicians can't get their act together, and besides all the other kinds of you could say political noise that we have here coming out of Washington, that could be extremely troublesome on a global basis.